Management talking about, gross margin expansion. Let's also tell you what you can expect from the earnings season, quarter se quarter tak. This is our segment where we talk about expectations from the FMCG space. So Mangalam, take it away.
Well, as far as the FMCG sector this time around is concerned, it witnessed some important trends in the third quarter. And here's what one can expect from the companies that will report their numbers. Demand moderation post-festive season, that's point number one. Then there is weakness in rural India. There have been some moderation in raw material prices, but demand for premium and discretionary has remained steady. Expected margin improvement and rural demand improvement will be likely only post the fourth quarter. From the updates that we have so far, discretionary as well as premium are doing well, whereas staples and rural-focused have struggled for growth. For instance, Titan has recorded an 11% growth in their jewellery business on a high base. Marico, on the other hand, recorded mid-single-digit volume growth itself. Godrej Consumer too reported low single-digit volume growth, and Dabur's EBITDA margins actually seen lower by about 200 to 250 basis points. DMart, on the other hand, has seen its third quarter standalone revenue grow by around 25%. As far as the expectations from companies are concerned, Britannia is expected to top the list with a 19 to 20% growth, HUL around 14 to 15 odd percent. These are revenue estimates by a bunch of analysts. Asian Paints around 12 to 13%, whereas we would see around 7 to 8% growth for the ITC cigarette division as well as Tata Consumer's revenue. But more than the numbers, it's important to watch the management commentary this time on what they're viewing demand trends to be, their views on product and pricing trends. Are companies reinvesting gross margin savings back into ad spends to spur demand? And the joker in the pack, of course, will be the rural demand recovery. Companies like Parle, etc., in the past have said to us that there have been some green shoots in rural demand in the latter part of December. So the big trigger for rural recovery would be easing commodity inflation, higher crop realizations, ongoing government interventions. We've seen a few being announced, and a likely stimulus from the union budget. All of that could spur rural demand. But importantly, as far as valuations are concerned, FMCG stocks have always traded at stiff PE multiples. This time around, they're likely to look at these PE multiples itself mildly off their earlier levels, but still about 10 to 15% premium as compared to their long-term averages.
Okay, thanks a lot for that. Well, Shirish Pardeshi, who's the FMCG analyst at Centrum, joins us now to talk about that. Shirish, good morning and thanks for joining in. First, I wanted your thoughts on the management commentary that we got from GCPL a while back, where they do talk about gross margin expansion despite all the challenges that they're seeing. Is it a stock that you like?
I think I did hear what Samir has said. What you have to keep in mind, and at the backdrop, which Samir did point out, second half of the quarter, we have seen a little dullness. And this is not particularly for one company. It's across the mass consumption which has faltered. And I think in that context, there are two scenarios. Either the demand is holding up, and that's what my feel is, that people are stressed with the inflation. And that's why the demand is holding up. And that's why most of the companies are saying that we are seeing some green shoots, which is going to come back maybe end of fourth quarter. The second point is that the other thought is that what we are estimating that the inflation will taper down. But I suspect at least that you look at the various data point doesn't give that confidence that quarter four, your inflation is going to settle down. And that's why my little different opinion that we might see that there are green shoots, but I suspect that the mass consumption will still see some challenges and some stress on the wallet share.
Okay, hi Suresh. We just spoke to the management of Godrej Consumer. They were indicating gross margin expansion. Some part of that will be visible, I think, in quarter three, but I think bulk of it will be quarter four. So for the industry on the whole, what kind of an expansion are you working with? If you could give us a couple of numbers. If you were to talk stocks specific also, you could give us a sense on that front.
I just repeated what I'm saying, that I suspect that quarter four margin expansion, which will be more than 30, 40, 50 basis points. The reason is that your winter has spoiled the entire demand cycle. And if the winter is going to get extended in the month of January, February, you will have to spend or investments into the marketing, in terms of promotion or giving a lot of freebies to the trade or to attract the consumer to get your demand back. And second, directionally, historically, the quarter three budgets for the ad spends is little higher. Maybe you call it as the festive season or the winter portfolio. But as you said, the second half of the quarter was little dull. maybe my sense is that the ad spends and promotion spends will get spilled over in quarter four. That's why I suspect not much margin expansion which will be visible for most of the companies.
Shirish, you track Asian Paints? Do
Sorry,
you track
I didn't get the question.
Asian Paints? Do you track Asian Paints?
Yes. So in terms of Asian Paint, what we found on the ground that the demand conditions are very strong, and there are two things. If you look at the heightened price increases which has happened over last 17-18 months is in the tune of about 27%. I think the trade is holding off because like us, even the trade also watches the quarter on week fall in the crude and crude derivative prices. So what I can confirm, having spoken to the trade, is that the primary demand has taken a toll because the trade is expecting a sharp decrease in the prices by all these paint companies. However, reality, it has not happened. So what I can only say that what we gather with our interaction that the demand is going to be higher mid-single digit. While the margin story may pan out for the paint companies, but the revenue growth will be mid to high single digit, high double digit.
What about Titan? What is your view on the update there? I mean, the stock is under pressure despite a 12-13% growth. You think it's once again valuation concerns?
Yeah, thank you, Sonia. Your observation is absolutely right. Even I was a bit surprised the nervousness what the investors have shown on the name. I think undercurrent jewelry demand, and we have to also consider that last year, quarter three, we had a very strong base where the jewelry demand was very strong. What we gather this point of time, all these big ticket weddings has happened and some spillover will definitely happen in quarter four. So my view is that your grammage growth, or what we call it as a volume growth, will be high single digit. Because the other factor which is also important, that the gold prices has stabilized. And I think that will also call for the redemption and the encashment of the investment in the advance purchase what the most companies have done. So I would say that it could be at this point of time an aberration. What people are saying that the discretionary may not perform. I think that's the market call.
Okay, all right. Thanks a lot, Suresh, for stopping by and filling us in with your take on the sector. We look forward to touching base with you all through earnings season. In fact, get a recap maybe post that as well. But let's focus on Mahindra & Mahindra. The XUV 400 EV is upcoming and the highly anticipated electric XUV from